thank you guys so much for being with us here today. Excited to highlight the team here from AIGPU. They have their launch upcoming on base. They're looking to hit a couple of key metrics before that happens, the first of which being around 3,000 Telegram members, and they're also looking to touch that 10K mark on X. They're almost at 6,000 now on that side of things on X, and I believe between the 1,000 and 1,500 mark on Telegram. So slowly kind of creeping up on that. It's going to be a fair launch style. As I mentioned, they're going to go live on base chain. It is a first mover style utility with what they're doing, and considering that they have an existing IRL business, a pre-existing client. They're already getting out there, improving their proof of concept. They're generating revenue and actually providing some great cost savings and optimization to their clients. So, as they like to say, the proof is in the pudding, and it's exciting to get the chance to talk to a team like this who have the background like they do. So, I'll keep it kind of short and sweet on my introduction. And with that being said, I will go ahead and just make sure that you guys have the website or the white paper pulled up alongside while you're listening to the AMA, so you can follow along a little bit better. But yeah, I'll throw the mic to the team if you guys want to go ahead and introduce yourself. And one final time, thank you for coming to Caesars for the AMA.
Thanks for having us. Yeah, so I mean, our backgrounds I think will come into play organically as we talk about this, but I'll give a very short version. Most of our founding team has been like early blockchain adopters from circa 2012, 2013. As such, we were heavy in the DeFi mud in the early days, building those relationships and learning as we went along. But in more recent years, we've branched out into various institutional deals and government contracts and different things where we sort of figured out the concept for this business before we put it into exercise. And Cowboy's here with me. He can give you a bit of his background as well.
Yeah, I mean, again, like Maestro was saying, just an early blockchain adopter. And then really, since then, has been leveraging a lot of immutable ledger technology into deep tech and kind of bridging a lot of those industries and creating brand new integrations and protocols. And I think really, like you said, we've been building behind the scenes for so long for institutions. We didn't really want to launch a project unless it brought real world utility. And so that's kind of where we are, kind of coming back to our roots a little bit here in the DeFi space, and really, really excited about the way that this project becomes a closed looped ecosystem.
Yep. So with that being said, Chanos, if you want to tee this up,
yeah,
give me a little background and then I can jump in.
I got you guys. All right, so I'll give you a quick introduction on myself, and then I'm going to transition into both Maestro and Cowboy. So I come from the digital marketing space. We got introduced to blockchain in 2020. We did several NFT projects. We're really good at building communities. And the biggest thing was there's a lot of projects that come up, whether NFTs or tokens, and they all have this short-lived, attention span, and they come in, they make their money, they leave, right? The reason AIGPU projects stood out to us is because of longevity. It's not just the software, but it's the hardware, right? We talk about the AI infrastructure. Everyone's hearing the word AI for the last couple of years. It's been around for a long time, right? Even like simple tools like Canva had AI features, Wix had AI features. People were just not using it correctly. Now you have all these LLMs like ChatGPT. You have all these crazy popular tools, Midjourney, Jasper, Synthesia, all these different tools that people are using to systemize and automate their business using artificial intelligence. The biggest thing is the infrastructure. Not a lot of people talk about the infrastructure. They talk about the AI tools, but not the infrastructure. The thing is, right, GPUs in particular are the powerhouse that enable AI tools to run efficiently next to these in real life businesses. So when Maestro and Cowboy came to us, a few months back, we fell in love with the concept because there's tangible real life utility to this project, And I'm going to give you an example. So back in the gold rush, you had, all the miners, digging for gold. But the real money was made selling the pickaxes and the shovel. These GPUs are that pickaxe and the shovel. The Industrial Revolution kind of shows you that. Now, as it relates directly to the revolution, AI revolution, right? The positioning and timing is super important, and that's why it's super cool to see these guys build something so powerful. You know, it's a real life business with clients already, with proof of concept already completed. You know, there's 15 plus team members between operations, marketing, community, you know, with deep backgrounds. These guys were being pretty humble. Not gonna lie, they're being pretty humble. They're 40 plus years of experience in things like cybersecurity, blockchain, of course, AI, ML, machine learning, full stack development, system optimization, and really innovating in this space. So I'm going to kind of lead these guys through a series of questions that will help the listeners better understand what AIGPU is. We'll talk about the roadmap. We'll talk about the, you know, the utility. We'll talk about the entire kind of end-to-end ecosystem, even to all the way back to how the project was started. It was a pretty cool story too, how it got started, and it led us right to today. You know, building up to this launch, and we'll go ahead and get started. So Maestro, Cowboy, you guys ready to kind of share the vision with everybody?
Before you guys jump into that, I'll just say, you know, thank you so much for coming by. I appreciate some initial overview. I don't want to defer, you know, push the conversation in any specific direction as of yet. So I will just kind of throw back to Maestro and Cowboy and let them do their thing.
Yeah, thank you so much, guys. I think one of the best ways to start is just to make sure everyone understands very clearly that there's a very big boom in AI. We all know that, but what makes the AI products work and function the way they should? And that's at bare minimum a robust, optimized GPU cloud. So with that being said, I think it's important to start by telling you guys where we figured out what we're doing and how we reverse engineered this process that could apply to optimizing compute resources. So where we were many years back was we had a government contract with a police force. And that contract involved implementing a new computer vision product to help with threat detection for the police. They wanted to be able to tell using street cameras and public cameras if, let's say, someone's carrying a gun under their shirt, or if their face matches up with warrants, things like this. But the problem that we had to solve was that heavy machine learning product would not work on the existing infrastructure. We faced challenges such as power limitations, compute and infrastructure limitations, and none of that was changing. So what could we do? The only solution that we could do was in the software. So we looked at everything and we decided, let's just delete it all. Let's start from scratch. Let's build our own drivers, our own operating system, and apply our own machine learning tools like compilers and different things to see how much performance we could extract from this existing antiquated infrastructure to meet the demand of the new product load. And we were successful. And in that moment, the light bulb clicked where we said, okay, when we get our hands on it, we can optimize any compute resource, whether it's a GPU, a CPU, or even other things. So that's the background of where we figured this out. And once AI became extremely clear as the biggest booming, tech market, it became very clear that we need to start in this fashion with AIGPU and apply what we learned to this market, bringing in a new floor price, a much lower price for companies to run their products while delivering them a much more robust cloud. And that's pretty much the background.
So it started with a government contract that led into a business, right? So I want everyone to understand the difference between a CPU and a GPU. So a central processing unit, a CPU, is what everyone used to use, right? It performs basic logic. But a GPU, a graphics processing unit, was traditionally used for rendering 2D and 3D images, right? So a lot of the generative art you see, a lot of the videos, a lot of the animations. But today, right, it's used for a wide range of uses, including deep learning, AI, ML, big data analytics. So the emergence of GPUs, it's changed the game, and it's being used more and more. So the analogy I like to give is like owning a GPU is like owning real estate, and renting out that real estate to somebody. You own the asset. It's way different than any other token, any other blockchain project, because you own a physical asset, and that's kind of what's different. Why don't we go into this, Maestro? Why don't you tell everybody what makes AI GPU different than the rest of the GPU projects out right now?
Mm-hmm.
Yeah,
Sure.
look, that's a great segue, and I always like to kind of jump in because I don't want to
Yeah.
just have you guys talking
Please
for
do.
10, 15
For sure,
minutes,
please
but
do.
that's exactly what I was going to go into with my question. Is I appreciate the background on like the origin and the idea creation. The second part to like that side of the discussion is always like the problem identification. So where you saw a gap between the existing solutions and then where you guys see you can kind of come in and kind of solve either the problem or improve upon it, right? Because it doesn't always have to be a 0 to 100 fix. Even if you go from like a 0 to a 50, that's a massive improvement a lot of the times for an industry. So that's really where I wanted to spend the time kind of focusing on that origin to kind of identification for where you see it fitting and solving problems going forward compared to competitors.
Yeah. So, I mean, I'll extrapolate like a few points from that. Like in terms of competitors, I don't see direct competition. I see other people in the same categories. Some are doing decentralized networks of GPUs where the company stands in the middle and they charge a fee to broker someone else's GPU to another individual that's looking to rent it by the hour. That's a B2C model. We differentiate because while B2C may be somewhere on our horizon, we're more focused on business to business and business to government, so B2B and B2G. And it's very simple reason why. I mean, it's what we're used to, but also if you want to make $1 of revenue, do you want to crowdsource 100 pennies from a bunch of individuals and hope they stay around? Or do you want to lock in year or multi-year contracts with institutions and funded generative AI companies and governments that have the budgets to actually commit to long-term contracts? So we're going that direction. Another thing that makes us different is we optimize the performance of the metal, like these GPUs, and that's not being seen. People are buying them, they're getting data center partners, they're doing whatever they want to do, and they're clouding the assets, or they're doing a decentralized network, but they have zero competitive advantage when it comes to price savings and product performance. Look, Tesla and Elon Musk proved it really well. Build a better product, people will buy it. They're now the biggest car company in the world, right? So it's like, if you can build a better product, save people money, then you're going to have your own space in this market. And, it might be good to mention, we did a proof of concept with a client who, when they started, had 100,000 users. They had a very heavily discounted deal with one of the largest chip manufacturers in the world. And they were paying 300 grand a year. Now, what we did was we took their bill down from 300 grand to 70K a year. We charged an onboarding and implementation fee that brought us to a 6-figure revenue target in the first year. That client is now happy. They were running 22% of the available resources we gave them at 100,000 users. They're about 200,000 users now, and they're running around 40% of the available resources, which, do the math, like they can now grow 150% for a quarter of the cash that they were spending. And that's alpha when we talk about like the Greeks of math, right? So what we're doing is creating a much more optimized, much more cost-efficient model. And also, another Elon Musk comment, he recently said GPUs are harder to get than diamonds. But it's important to note that not all GPUs are the same. Look at NVIDIA. they release a vast array of GPUs in their menu. Some of them, like an H100, is ready to go. Pull it out of the box, plug it in. It'll work for AI, machine learning, deep compute. But when you look at like an RTX 4090, so if you guys want to go to the white paper and go to, side-by-side comparison of H100 and RTX 4090s, or the following page where it shows how to extract similar performance to an H100 from multiple RTX 4090s, that's our proof of concept. Can we take gaming and 3D rendering GPUs that no one's paying attention to, while the supply chain is throttled on AI GPUs and backlogged? Can we go to these other areas of the supply chain, strip off all the software and put our own sauce on top and make it work for AI and save a lot of money? When we did this for the client, we spent about $1,800 per chip for 10 RTX 4090s, deployed a server for 18 grand that has similar performance to an H100 that would have cost us 40 to 60 grand in the secondary market. So for about 33 to 50% of the cash spend, you can deliver the same product performance, saving everybody money and delivering faster generations, faster cooldown rates, which is important because faster generations create more heat. So you need to cool things down just as fast. And that leads to a smoother working product, a better user experience. If you're using a prompt to image or prompt to video or prompt to text, whatever, it's going to run faster on our metal while saving them money. So that's a big way that we're different. And also having the experience with government contracting, you have to have licenses. Well, you at least have to have clearance and experience working on-prem for governments in order to close these contracts. And, several members of our team have that clearance. I don't. I'm not going to lie to you guys. But I do own a cybersecurity company that currently does the private cloud security for top US government agencies. So we've been on-prem, we've built things, we've optimized them before for governments. And that's really important when you're going after the big clients. We're talking institutions and like that are implementing AI tools, from law firms to medical institutions to financial firms, etc. They care about security because they have liabilities. They're a big company, they have shareholders oftentimes, and they can't risk a data leak or any security breach. So when we can bring in that government grade security, it satisfies their biggest line item. Then when they see the cost savings, it's kind of a no-brainer. When we go to generative AI companies, they're primarily caring about cost because they just raised some money, and their biggest line item outside of salaries is GPU cloud. So we can save them money while giving them top-end security as well.
Also, we have a backlog of clients ready to be onboarded into our servers as well. And these are, we can share some, we're not going to share all, but I mean, really large business use cases. We're talking, digital casinos, we're talking a lot of other
sports books and different things. I mean, the reality is that the client acquisition is not the difficult part for us. It's a very important part, but it's been organic growth so far, and we're getting inquiries from potential clients, partners, even some competitors, or if you want to call them that, coming in looking to partner. So that's the general thesis of what we're doing. So I don't want to keep steamrolling. If you guys have other questions, I do have more things to say, but we got plenty of time.
I mean, that a couple of different ways I could go with that one. Just based on the points that you raised. So, the first thing I want to ask is what's your thoughts or plans in terms of scaling and allowing for potential outside investment? Because I know a lot of the times when projects scale, they potentially allow community members or larger holders to contribute or be a part of nodes to allow for additional bandwidth. Now, I don't know if you guys are going to utilize more of like that crowdfunding approach, or if you guys will go more the VC route, like when you're looking to scale in the future, or if like the way that you've set it up, the money or the revenue that's being generated via your clients is going to be able to cover essentially that cost of scaling and then still generate some profits.
Yeah, I mean, we're not really raising money. We, quite frankly, we could self-fund whatever we need to, but this was more, again, us going back to the DeFi roots from which we were born, if you will, as entrepreneurs, and just democratizing the opportunity for everybody to invest in AI infrastructure in a safe way that's well hedged and transparent. And I think perhaps it might be a good time to explain how the token affects the real world business and how the real world business affects the token, if you think that's a good time to dive into that.
So if you want to go that route, just I don't know if you'd want to start with the business first or the token first. I always defer to the team because you kind of know the flow of your own project a little bit better than myself as the host. But just make sure while you're going through that, you're definitely touching on a lot into the tokenomics and how like the supply side of things circulating versus what's being held back comes into play.
Yeah, so you guys can see our white paper on tokenomics page, and you'll see that there is a tax, right? Like that's consistent with others in the AI compute space. That 5% tax on buy sell is there to provide capital to the IRL business. But on tokenomics, I'll let Cowboy step in for a second and break that down for you.
Yeah, so I mean, really, where it's a fair launch, putting about 70% into liquidity. The rest is Treasury essentially, and you can read the breakdown of what the Treasury it is on our white paper. It's kind of a closed loop ecosystem, right? So we have taxes on the buy sell. Those taxes go into buying and standing up more GPUs to create more computing power, and then the in real life business. We take from the profits there and buy back and burn tokens, creating this ecosystem. And I think it's really important to understand that we're a real life utility. And so regardless of price action, we're going to be buying back and burning tokens, creating a deflationary pressure. For us, it's really more about, like Meister was saying, is democratizing the opportunity for people to get in, because we've seen what's happened in these GPU tokens, these GPU coins, and really wanted to bring some legitimacy to the space, and especially going on base, being one of the first utility focused coins over there, and what we believe is going to be the premier L2, really gives us an opportunity to become a blue chip early on. So very excited for that.
Yeah, and I'll expand on that a little bit. When we look at the tokenomics, right, we've got like 2% of 5% allocated for GPUs and 1% allocated for OpEx, and that's sales, that's account management, that's client procurement, all the things that you need for a nice white glove service for high-end clients. And the remaining 2% is to expand that marketing campaign into awareness and authority campaigns that really share, updates that we'll be giving in our private communities, also, to the rest of the world. And let's break down our transparent financial loop, because this is what I would want to know if I was an investor. Like, how can I trust the flow of funds? How can I trust this company is doing what they say they're going to do? So what we do is, let's say we take, $500,000 and go buy more GPUs, right, in the first however many days. What we're going to do is, you're going to see on the blockchain that tokens were taken, right? And we'll put a message out letting people know what we're using that for. Then we'll take delivery and ownership of the GPUs, at which point we'll take a physical photo or videos of the various boxes, the serial numbers, and any sort of identification numbers that could prove that's that asset. But we're not done there. Within another couple weeks of delivery, we will deploy one or more servers based on, how many GPUs we bought. And at that point, the server's live, and we thought it would be really cool to kind of ask the community to send us a few files that we could process on the new metal. And then we'll take the hash of that compute, so proof of compute, and we'll send it to the community via images, video, whatever makes sense. And at that point, everybody's going to see this much money was taken from tokens, this many GPUs were bought. These are the physical photos with serial numbers, and those serial numbers and IP addresses match on that proof of compute to show we actually did what we said we were going to do. So that's the token to the real world business. And how the real world business goes back to the token, like Cowboy said, is we generate revenues, right? So we rent those assets to tenants that pay much like your cell phone bill or your lease if you rent an apartment. It's a year or a multi-year contract. We can see our revenue projections with certainty and plan out how much we can take from our profits to buy back and burn tokens on a regular basis, be it monthly or quarterly. I think monthly sounds pretty good. And at that point, as we buy back and burn tokens from our liquidity pool, we will be creating deflationary price pressure on the token asset itself, which benefits all holders. So that's how we create a closed financial loop that's fully transparent and ties the real world business to the token business.
So guys, I just want to mention, if you haven't already,
go ahead.
Yeah, I was saying, if you haven't already, everyone should go to the website, AIGPU.co, or the Twitter, or the Telegram, and go read the white paper. Someone coming from the tech side, from the software side, I didn't really understand until I joined the team. These guys laid it out beautifully, right? They give you the example, right? The side-by-side comparison of the NVIDIA 4090s and the H100s that really, really breaks it down, real life purpose and application. And, there's an article I was reading the other day with NVIDIA CEO Jensen Huang. He predicts that the organizations will spend over $1 trillion in the next few years to upgrade data centers for AI, right? It's the AI backbone. And there's big companies like AWS and Google and all these things, but this is a perfect time to get into this infrastructure upgrade, right? It's unprecedented demand for this infrastructure upgrade, and that's what AIGPU is doing. They're on the forefront. That's why I gave that the gold rush analogy. So keep that in mind as you learn more and more about it, as Maestro and Cowboy kind of lay out, in layman's terms. But these guys, if you want to go nerd out, definitely go read the white paper.
One big question everybody has is, when is launch? And I want to be really clear with everybody that with our experience as early adopters in blockchain, we know that one of the worst things you could do is pick a firm launch date, tell everybody, and then something doesn't work out, you get delays, and you have to push that launch, right? So we focused, like Maurice said here, we focused on just metrics of growth, engagement with the community. Are they educated? Do they understand what we're doing? Do they feel confident that they can make a sound investment? And do they also feel like all their questions are heard and responded to in a considerate fashion by the right people? So I'm heavily involved in our Telegram. I go in, every couple of days. I watch it every single day. But if I see a real question that needs, answering from our founding team, I'm in there. And even people that DM me, I'll post my responses without, doxing anybody in the community if I feel like it's a valid piece of information everyone should know. So our goals are 3,000 on Telegram. We're approaching very quickly 1,400 right now. We've been doing this for a few weeks. And 10,000 on Twitter X, right? So we're at around 5,600, something like that.
Those are pushing up to close to 6K, I think now.
Yeah, I mean, I always like to take a conservative metric. Like But yeah, I mean, if we're getting there, then great. I think we've got some, and that's been organic for the most part. You know, we just started this week with some bigger like tier one AMAs, and it's been amazing. Be very well received, and we've seen some good growth from it. So we do believe that we could hit these metrics within the next, I don't know, maybe by the end of this week or sometime next week, in which case we'll be launching within 3 to 4 days of seeing those metrics and making sure that, you know, people aren't dropping off, but they're actually staying there to bolster a successful launch. So, you know, I'd advise everybody to go to our Twitter or our X. Make sure you not only follow, but that you have notifications turned on, because we're not giving you the date. We're going to tell you if you're following us, and you're going to know only at that point. So it's very important to make sure that those notifications are on, and also follow our Telegram. Especially if you have any questions, you can ask there or just DM me. And other than that, yeah, that answers the launch question. So there is another very unique advantage that we have, and I think that unique advantage is also pulling in prospective partners, clients, and the like, because it's almost just as important as our optimization of the hardware itself. And that's, we partnered with an Indian nation, and by that I mean, you know, Native Americans, but they're a very unique Indian nation that stands alone against everyone else, because they never signed any treaties with the US or Canada. So my partner's Chief Roger Jock at the Akwesasne Indian Nation, First Nation, and because they didn't sign treaties, they are sovereign on a different level than any other Indian nation. So what we'll be doing is we'll be creating a sovereign cloud, and as we grow, we'll be buying different compute resources to expand our service offering to a sovereign data center. This is huge. It helps the company keeps its price even lower, because the tax, there is no tax on the company. So, you know, even if somebody were to come in and try to mimic our model on optimizing systems, they would also still need to undercut the tax benefit to even come close to our prices. So this is where we see a future, a sustainable future, and something that's worth putting all of our time into, because I mean, Amazon became Amazon, a $1 trillion+ company, because of their data center. Nothing else. Nothing that they sell, nothing that they do, their TV, their Prime, none of that shit. It's all because of their data center. So if we can become a billion or a multi-billion-dollar company, being a unique, optimized, very affordable data center and or GPU cloud, then that's our corner, and that's where we exist. And that's why I don't really see any direct competition, because really good luck to anybody who wants to roll up their sleeves and figure out how we do this, and then put the right partnerships in place to lower their prices as far as we have.
Also, we're not trying to be the next Amazon or a very large, you know, really data center. We're not competing with the large data centers. We know our niche. We know how to optimize the hardware, and really are focusing on the applications that we like to use with this optimized hardware. So yeah, that's not really the goal, right? Is to become the largest data center in the world. It's to just do a really good job with select institutional clients, and continue moving that momentum forward and that bar forward to what optimized GPU farms can be.
You know, and we've been asked recently to join a very elite group of companies that are coming together to create a proof of inference standard. You know, it's something we're entertaining. It's not decided at this point, but they, you know, got on a one-on-one with me and said two things. One, three things. One, love what you're doing. Two, we have a GPU allocation. We were going to build our own farm, but we'd rather just have you guys build it and make sure that we have a discounted rate for our products. Three, they invited us to be one of the leaders in this kind of global push for for holding every other company in this domain accountable to a complete standard of inference and a standard of compute, because every time there's a money bag to get, everyone floods into early action. And that's what we're seeing in the market right now. But the ones with staying power are the ones that take their time, wait for those competitors to give you market validation, measure them, and make sure you're better, and come in with real alpha. And that's what we're doing.
Yeah, there's a couple of things, it's I apologize sometimes if it feels like I'm going back a little bit in the
No,
conversation,
please
just
do.
with the amount of stuff you guys unpack, sometimes I have to go a little bit there. I think in terms of the chain selection, it does make sense to go on base. I know if for those who follow the space specifically on Twitter, you're seeing a lot about RWA in terms of real world assets and how base is, a smart choice. I think a lot of people are kind of leaning towards that as one of the main um, kind of like main chains or main L2s when it comes to that adoption. I would say, I like Hedera as well. And, they've done some stuff with companies like Dell and IBM and stuff in terms of node funding. But yeah, like I like base as well. But a lot of what we see on base so far is not the method in which you're choosing to launch it. You guys are kind of going outside of the traditional norm or traditional meta, at least on that chain, where for these bigger projects or more serious projects, they're a lot of the times going with large pre-sales, massive raises, where it puts a lot more stress in the early stages on a project. So I like what you're doing, but I just wanted to have you comment on how you guys went about that decision making when it's very different from that chain and how we are seeing a lot of the projects come into light.
Well, that was the point.
Yeah, exactly.
We wanted to be different. We wanted to be a blue chip in a sea of questionable speculative assets. Like, we wanted to bring, because the thing is, bridging's become more convenient, but wouldn't it be nice if you could just like have something on base that was a nice stable hedge in your portfolio that still has upside potential while you're flipping whatever short-term investments you're doing? And I don't really partake in short-term liquidity grabs, but I also don't hold it against anybody who does. Make your money. But from my perspective, I want to be around for the next 10, 20 plus years. And I want to take a lot of people with us that see that value and see like this kind of amazing opportunity to grab some of the AI real estate. That kind of dovetails into something you brought up earlier, which was what incentives do we have on our roadmap for like long-term holders, right?
Can I add to this point real quick though? The base
Yeah.
point? Yeah,
Please do.
yeah. So I mean, you hit the nail on the head with kind of what our thoughts were about why we're going to base, and it really, I mean, we're kind of surprised, right? Because how much TVL is locked over, or is over on base for the lack of utility is really amazing, and we only see that trajectory going higher and higher as base really starts and is proving itself to be one of, if not the premier L2. So it gave us this unique opportunity to come in, bring utility, and actually be one of, if not the premier blue chip utility on base as it grows. And so it's just a really wonderful opportunity for us. And again, it's amazed at the amount of TVL that's on base with such kind of meme culture. It's interesting, but it gives us a great opportunity.
Yeah. And yeah, no, I couldn't have said that better. So I think, going back to your point earlier on what's in it, for these long-term holders, aside from, holding a well-hedged asset-backed investment via the token. And we have designed a sort of RWA or lease to buyback kind of an NFT model as well, where holders of the token will be able to actually own either outright or a fraction of any of these nodes or servers through these NFTs. And that enters into revenue share from that metal, right? So if we have GPUs we've already bought or we want to buy more GPUs, either way, it doesn't really matter. Everybody in this community, everybody here has the opportunity to kind of stake their claim in the metal itself. And our margins are very, very healthy. We were extremely conservative in that white paper and said like 68% cash flow, net cash flow margins. But we ran those calculations and it's over triple that. It's almost 4 times that after our proof of concept was complete, because we wrote those numbers as we were starting our proof of concept. And when we ran the calculations, we realized that we're making a lot more than we thought. So when we have those healthy margins, considering we're still at like a very low price compared to anything in the market, that's where we can invite people, holders of our token, to buy an NFT, get a percentage of that revenue, and over time they can either stay on or they can transfer that NFT, whatever they want to do. So that's more of like a second phase of tokenomics and further decentralizing the ownership of the real world assets and the revenues born from them.
There's I don't want to go off there's another thing you also mentioned in terms of like the metric growth on your socials before you guys launch. For the Twitter side of things, we'll definitely be able to put you guys and help you out with a couple of additional spaces. I know Will would have likely mentioned it, but we have one coming up tomorrow. Now I don't know your availability, but we do have a weekly utility showcase, and if you guys would be interested, just considering the timing, I'd love to have you guys on as my guest. It's at 1 p.m. Eastern. The start time. Projects typically take the stage around 1:20, 1:25. So if that works for you, would love to have you there. And then next Wednesday, I already mentioned it to the CMO from CoinMerge, who's our partner. They run a space focused on base chain called This Space is Based. So I told him would love to have you guys as kind of one of their headliners for that. And we're having a call at 4 p.m. So once I talk with him, I'll put you guys in touch with that. So
would love
hopefully we can help out a little bit there.
Yeah, no, I think it would be great. And thanks for the offer. We'll definitely take you up on that.
In terms of kind of staying on topic and what you were discussing with regards to the real world assets and incentives for people, I know from the crypto side, the DeFi side, that the Treasury, the way it works is 20% of net profits from the business are allocated back to the Treasury, and then the tokens, the AIGPU tokens, are essentially bought and burnt, creating that deflationary element. That is another incentive that you guys are doing to kind of add value. And I do want to just have you touch on the way you structured it, because I know it you have to kind of do it that way to avoid direct profit sharing, because that brings in questions of security and whatnot.
Yeah, and I'm so sorry. I had a call come in. I just put my phone on Do Not Disturb. Do you mind just repeating the question?
Yeah, 100%. So I was just I just touched on the treasury element and how you guys kind of have that 20% net profit going into your treasury, and then you're buying back the AIGPU and burning it, creating the deflationary element. I just wanted you to kind of break down a little bit more on that. And
Yeah, I mean, it's pretty simple. Again, always through a conservative approach when it comes to financials and projections. But 20% is a number where everybody agreed we can hit that consistently and probably outperform it. I don't want to overpromise anything, but the idea was picking a number that we knew we could commit to even when times are tough. Like, even if the crypto market takes a dip and it crabs on the charts for 3 to 6 months, like, what could we still do during those harder times? And that's where we sort of landed on 20% of profits. Now, if everything's going well, if the token is performing really well, maybe we're in a bit of a bull run, if you want to call it that, before the end of the year, and the business and real world is also doing well, there could be scenarios where we do more than that, right? It's just a question of making sure that both businesses, the token and the real world business, are being considered within our fiduciary responsibility, as well as our responsibility to the investors. So, the whole point is to make everybody as much as we can, but we got to be very, very responsible and tactful with that approach. So everything's been measured on the most conservative basis that we can, to make sure that we're always meeting or exceeding expectations.
And I had mentioned, like, you have to kind of structure it that way to avoid, potentially flagging being looked at as a security or anything if there's direct profit sharing and stuff happening. So I do understand from like the more crypto or DeFi side, like the way that projects choose to defer profits to more of a burn versus a direct distribution.
Correct. Yeah, we have very, very strong compliance team that I mean, it's a collective now, but I've personally I can speak to the people I've brought on. I've got a former SEC attorney who's a managing member up at a big global law firm, that's based out of Chicago. And his background, he was SEC special counsel to the commissioner, helped write Reg S, was the former vice chair at the Chicago Mercantile Exchange. So he's very familiar with hard assets, and he teaches crypto at prestigious law schools. And effectively, the combination, that trifecta of crypto, SEC, and hard assets, has been extraordinarily beneficial to rounding out the ideation and strategic planning on the corporate structure and compliance side, and making sure that we're building something here to last. But again, I point back to the Indian Nation partnership, and there's certain incentives and benefits from having that partnership that only make life a bit easier on the compliance front.
And you kind of do need to have that expertise, especially on the compliance and legality side of things. So no, I mean, that's some impressive pedigree, as kind of suits the theme of your team over there at AIGPU. You guys definitely have
I'll
a
tell you
lot of
one thing, man.
experience.
Like every single person that we have, whether it's a team member or advisory or counsel or whatever, we're not cutting corners. Like we're spending a lot on this stuff. That these attorneys are not cheap. I've got like a task force of about 8 to 10 people on call 24/7, and that's not cheap, I can promise you. But it's okay, because we believe in this business. We believe that whatever we put into this right now is going to come back in spades for us and for everybody. So why cut corners? Why leave any loose thread that could hurt the business, or worse, hurt investors? So you got to come at it from all these different angles. And I think a lot of this stuff is often overlooked and thought, how can I do this anonymously? How can I protect myself, as a person with liability, when you look at the founders of different tokens, right? But they don't really solve the problem so much as put a band-aid on something for a little bit. And we've seen what happens. Most of these projects fail. But yeah, it's just, we've learned the hard way over time. There's a right and wrong way to do this stuff, and the right way is to just be funded and pay the money and set up a firm foundation that you can build platforms and successful businesses on.
And I mean, I was going to ask a different question, but you brought up a point that I want to maybe go into a little bit more.
Sure.
And that's in terms of the adoption side of things. And like a lot of the times when you talk about, if you guys were positioning this as maybe an IPO or a startup in, Web 2 and going the capital raise route, you're going to get maybe a little bit of a higher buy-in in terms of like what the actual problem or that you're trying to solve versus crypto. Because a lot of the times right now, just the way that the blockchain's unfortunately used is more on the profit taking side, right? And people look at things not so much in what's being built, what's being solved, but how can I make money off of it if I invest in something? So I wanted to go more into the discussion on education and how you guys are kind of trying to change the narrative on how people look at a project like this and are going to be able to onboard them into that way of thinking, because I come from, stocks, and for me, a short-term investment is 3 to 6 months, right? But in this space, a short-term investment could be as short as 3 hours or less, right? So it's a very different train of thought. And, it took
Yeah.
me some serious adjusting when I first came in.
Yeah, I resonate with that pretty deeply. I think
I was going to say, well, kind of what we were talking about, getting the metrics for our socials isn't necessarily because we want, just build a big community. We want to build a community for exactly what you're talking about, for the education. So we get a good, firm base before we launch our project of people that are educated, are understanding of exactly what we're doing here.
And that's why I'm so involved. Like, that's why you'll see me if you're in our Telegram. Like, I'm there every day. I'm fielding the big questions. My team even knows to tag me in because I am that involved. And but you're right. This takes education, and when you deal with education, there's kind of two levels. There's understanding time, and then there's acceptance time. And I think understanding personality types and understanding, like, again, part of my background started in advising, and I didn't really know what I was doing as an advisor for some of these early stage crypto companies until 2017 hit. And once that happened, all these big relationships from huge companies like Microsoft and Yahoo and the like were coming into leadership and advisory roles. And it was my job to explain things to them. So from that, I became a consultant because a lot of these people were saying, man, you helped out so much. You really need to start charging for your time. So I built a consultancy that led to a partnership with an R&D company where we did bigger contracts with institutions and governments. So when you think, like, my whole purpose has been making sure people can grasp what's going on. You may hear this as an information overload and say, oh my God, these guys might be smart, but this is like too much for me to wrap my head around. Well, that's why I would say go to the community, post some questions. I'll give you guys answers that are custom tailored to the way you're asking. And, you just have to be very hands-on and very committed. When I told our team when we started this, I said, look, I just want everyone to feel like their voice is heard and their questions are answered. And if we can do that, we can educate. If we can educate, we can build a good community that'll trust us. If we have a transparent model, they'll trust us even further. And that's really what we're looking for. And again, I'm not trying to compete or distract people from those short-term liquidity events. Go do it. But then what? Then you're chasing the next one and the next one and the next one. You get rug pulled, you get scammed, you level yourself. So what if there was a nice place where you knew, kind of like a stable coin with upside potential, that you could go and have a safe reserve of funds that are easily deployable on base in an instant if you wanted to. But then when you're done ripping on a meme coin or whatever, you come back. Yeah. So we're just trying to be a blue chip safe spot for people to hold value and make money.
And really, we wouldn't have started this project because we've been there. We've been, in the DeFi world, we understand how it goes and how most of the market is. But we wouldn't have started this if we didn't think this could be a top 100 project, point blank. And so that's really, ultimately what we're striving for, and what we want is to be, a blue chip, not only on base, but kind of in the whole blockchain ecosystem itself.
Mm-hmm.
Like, as you guys go through that process of growing, it's like, the approach that you're taking now, pre-launch, versus when you're sitting maybe 50, $100 million in the future. If you guys get there, and I know you're all optimistic and pretty positive that you can, like, what does the approach look like in the future? And specifically, like, I know you guys mention or make reference to in your white paper a few times, the traditional supply chain and lead times. Well, how dependent will you guys be on, the traditional supply chain when it comes to scaling as you hit those higher milestones and market caps? I know it mentioned around 6 weeks was the initial kind of shipping time on the GPUs, plus then, a bit more time for assembly and setup and testing. And then you also look at, some of the shortages we've seen in the past with, the semiconductors and microchips. like, how do you guys scale a reliable source or kind of like trading partner to make sure that you guys can receive that stuff and maybe reduce some of your supply chain lag time, like as you guys hit those milestones and need to really increase to meet your client demand quicker?
It's a good question. I think a few like multi-pronged answer. One, we really just set out to achieve a proof of concept, so we dealt with actually procuring GPUs from the secondary market. But that's why it took that 6 weeks. If we continue down that path, it's still going to be like 6 weeks or more. But we've built better relationships with NVIDIA, with AMD, with these chip manufacturers where we can go direct. But also, another prong is that we have some recent potential strategic partnerships who already have allocations either on our advisory board or people that are looking at the market and saying, oh, there's nothing good for me out there. I have to build my own GPU farm. But I had a one-on-one with a company recently that said, hey, if you guys can just discount our bill, we'll give you our allocation, with NVIDIA, and you can just have it. Just make sure that we have enough metal and what we need and a discounted rate, and you can have the rest. Because they don't want to build their own GPU farm. Companies that are smart are realizing it's the right way to go, but it's like renting versus owning a home, right? So they look at it like it's not a bad play if we do it. We get assets under management, we have control of our systems, but there's multiple ways that we can expedite that. And a huge point is we don't get stuck where anybody else would get stuck because we're not specifically tied to AI compatible GPUs. We can tap into the areas of the supply chain that are more geared toward gaming and 3D rendering and things like that, because we can strip off all that software and put our own software on top that optimizes non-AI GPUs to actually do AI tasks and deep compute tasks. So we don't have the same barriers in the supply chain that others do. And that's really where we can kind of set our own future.
And we don't blame these guys, right, for not wanting to build their own GPU farms, because it's not, like Maestro was saying, it's like, owning versus renting. Well, it's also like having to own, but then also having to buy a home builder and then having people to maintain that home
and pay rent and pay
rent
all that electricity
all
and
that,
everything else.
So it's a little, we don't blame them for not wanting to do it.
There's also physical security and cybersecurity risks. Like if someone knows specifically like where you're storing all of those expensive assets and they get harder and harder to get, what do you need to do? You have to have guys with freaking guns and barbed wire fences and the whole 9 yards. You also need extraordinarily robust cybersecurity, like full stop. And a lot of these companies aren't outfitted with a large enough IT sec department, so IT security, to do this. For example, when we've worked with institutions, even if they're a multi-billion-dollar corp, oftentimes their IT security department is less than 20 people, which means that's an indication that they're going to want SaaS. They're going to want to buy software, they want to rent it because they can't manage it internally. If the company has like 50 plus people in their IT security department, then they'll most likely want to buy it and manage it in-house and maintain it from a security and operations standpoint and maintenance. But, this is our experience, right? Knowing what companies do, what to look for. And I can tell you right now, like, it's going to be, it would be so anti-productive for a new AI startup to have a 50 plus person IT sec team. It would just kill their bankroll. So that's why they lean on us, because we already have a robust department in each of those domains that can do the job.
So guys, I want you to realize, I don't want you to let that go over your head. What they just said, these big companies, it takes them too much time, energy, resources, and money to set up their own ecosystems like this. So what AIGPU is doing is democratizing the opportunity for retail investors to access typically centralized opportunity, right? So these opportunities can only happen in DeFi because it's usually the tech giants that are centralizing and monopolizing it. And now AIGPU gives a chance for everyone to do that. So I know we talked about the tokenomics, talked a little bit about the roadmap. Why don't we finish up the roadmap conversation and segue into marketing a little bit and how we're really gonna educate and bring upon mass adoption of this tech.
Sure. I'll keep it very short and sweet, like 60 seconds. Roadmap is 4 simple phases. Phase 1 was proof of concept, which you can see on our website and in our white paper. That's complete. Order our first GPUs, implement our proprietary code and tools, deploy the first server, rent it to a client, and achieve a 6-figure revenue target. Phase 2 is scaling. That's where we are now. Scaling that sovereign cloud, if you were, that GPU cloud that's optimized. Phase 3, we're going to reinvest into new hardware, CPUs, and different kinds of compute resources to expand our offering as a full data center. And phase 4 is going to be scaling that data center. It's very, very simple. We're not promising some crazy stuff on our roadmap. It's all right down Main Street with a simple 1, 2, 3, 4-step approach.
Boom. Yeah, perfect. I appreciate you guys kind of simplifying that, and also I'll touch on what you're saying for in-house versus outsourced. Not just is the infrastructure expensive. I worked for a little while in a company that had a fairly large department, and those guys are not cheap. Let me just say that. It's probably one of the priciest sectors to hire people out in. So if you're building out a strong 20 to 50 person team, each person on, I would say, a very conservative level is making $100,000, and that I think is very low.
That's super
especially
low.
when you get into the manager director level, it's typically like 180 above. So yeah, you're looking at if you have a 20 person team, let's just say 180, you're looking at you're looking at under $4 million, just under $4 million on salaries alone. So like how many crypto projects and stuff or newer startups that are looking to scale can afford that on top of the infrastructure, on top of like what they're doing day to day, other employees, overhead, it's very difficult. So yeah, you guys definitely have found a sector where, because of the costs associated with, in-house use, you can really, there's a large market share that you can capitalize just based on that alone.
There's that. That's a really, really good point. And I think you are very conservative with those salaries, because our guys are more than that. But the point is that we also can provide speed to market. So when you look at all these companies that want to train their own internal LLMs or their own implemented AI products, like they want to move fast. They don't want to be left behind. They all know they have to get into it. But their biggest question is, can I understand it, and can I execute? And if we provide the execution and we educate them to understand, we kind of just hold their hand through that process and just allow them to go to market quickly. Another component is we have a very, very deep background in data and data privacy, working on self-sovereign digital identities and digital identity protocols that benefit people. And what we learned and what we're doing here, another service we can offer, is making sure that no personal information gets leaked. And that's huge. And what I mean by that is, imagine you're an institution and you've got to KYC somebody, right? Now that they have to submit a photo of their ID, they have to tell you their name and their age and their address, all that crap. But if you just want to train an AI model with data, the AI model doesn't care what their age or their sex or their name or their whatever is. They just need the data of the trends that they're doing in order to train. So what we do is we create a synthetic data set. So as our clients come in and have users come in and information is shared that's personal, we have it verified, but then we delete it. And now what's left is the company has a full ledger of compliance that they can report on, but they don't have to take that risk of, what if someone hacks this data center? Well, if they hack the data center, first off, good luck. But if you do it, because it's possible, then, what are they stealing? A bunch of, numbers and trend analysis and things that don't affect people. It's actually we see this all the time. Wells Fargo, Facebook, 100 million plus users got their data breached, go change your password, right? But imagine if those companies didn't even have to put that out there because there was no personal information at risk, right?
And
So,
a lot of that security comes from our experience in the blockchain space, right?
Yeah.
You know, building out zero knowledge layers, zero knowledge proofs, understanding what an immutable ledger can actually do for these security systems. So that's also kind of why, to go back to one of your first questions, okay, why crypto? Why go into the blockchain space at all? Well, because it goes hand in hand with the security that we're bringing to this infrastructure.
yeah.
And then when you guys are looking, you know, from the, I guess, back end side of it, like, will you at any point have to expand the team, or do you feel pretty confident with, who you guys have right now to be able to like grow out
We're
the,
good. We have over
yeah.
30 people right now. It's probably pushing
Okay.
40 right now. And that's just on AIGPU. That's just like front end, back end team. Back end team is supported by various companies that we own equity in. So kind of like an agency model. For example, if we need my cybersecurity company, I can tag in our top guys from there and pull them off what they're doing and bring them here. You know, and same goes for other services. But realistically, one of our core founders who's not on this call, he has the clearance and experience on-prem at government servers and data centers and working on them. Is the clearance to do that himself. But we also have a team of about 35, 40 people in cybersecurity with clearance to do the same. So it's not like we get stuck. We have plenty of layers of redundancy. If someone's sick or traveling or whatever, we're not waiting for that plane to land or for them to get better in order to keep the business flowing forward at full steam. So yeah, I mean, I hope that answers that question.
Does. And then, looking at kind of the other way that you guys can get exposure is through partnerships and collaborations. I know you announced one a few days back with ZKML.
Yep.
It's not so much like, what you guys are looking at or any other names of partners, but it's more so what you look for when you're partnering with other projects or brands, businesses, influencers, whatnot. Like, what do you guys kind of need to see on the back end, and what are maybe some gaps that you guys have that you're looking to use partnerships to leverage?
In terms of gaps, I'm not looking for a partner to help with any gaps at this time. For us, it's simply, I would say, one thing, and that's return on time. Can we get more done with less time? Does this advisor, does this marketer, does this client or partner, rather, not client, but partner, save us time? And can we also save them time on their goals? And I think from that, I always draw an anecdote, and that's when the value is clear, the decision is simple, right? So it's not really like there's a standard one size fits all to how we approach partnerships, but there is an underlying fundamental value that we look for, and that's, can we both save each other time on our goals? If someone has a data center that's not performing well and they want to pledge those assets to us so we can make them more money, and that gets us a lot of metal very quickly at a better deal, then that's a good example. Another one could be a generative AI company or a blockchain company that has an allocation to NVIDIA, or maybe with Grok or AMD or something, where we could really optimize that allocation, but give them a much cheaper cost on their services that they need from us, and we can contract them out into multi-years. So it's like, for us, it's very much just that simple metric of time.
Or an existing, an existing product or an existing protocol that wants to move over to our servers with an already large, base, and sees the benefits of going.
That's like a ZKML.
Yeah, exactly, like a ZKML. And the reason why we can go into why we love ZKML, right, is because what we're doing with them is they are looking to deploy some of their protocols on our metal, and we love what they're doing from a security standpoint, again, going into zero knowledge, and looking how they can bolster our systems with more obfuscated layers and more immutable ledgers. So I mean,
Right.
that's a
Yeah.
great example of kind of a synchronous partnership that we're looking for, more strategic than just anybody off the street that has money.
Yeah, and we don't want to like grab a partnership just for like a short-term marketing push, right? Because we're not in this for short-term gains. This is long-term. This is a huge part of our portfolio, and this is something that we're also clearly very passionate about. But when you see an opportunity like this, where AI is booming, right as we're on the precipice of probably the biggest uptrend in the crypto space, like what do? Right? You launch a token in AI, bridging it to crypto and blockchain, and set up for what we know is coming. So I like ZKML as well because, like Cowboy said, that zero knowledge proof and the multitude of ways that they're looking at disrupting various sectors, from messaging to what are some others?
Oh man, yeah. I mean, messaging, just the different apps that can be launched natively using a zero knowledge layer like that is one of kind of building that base foundation. Is kind of it aligns with our ethos.
So yeah, I mean that's pretty much it. Just return on time. Can we both save each other time? Can we make our products better? For ZKML, it's their products will run faster on our stack. So it's very simple, and it'll be cheaper for them. For us,
Another thing I'm
some security.
Another thing I'm curious about is like, how do you guys what do you guys ask of your community members? Like, how can community members get more involved? Like, what can they do to add value to the project? And maybe taking that one step further in the future as you guys look to scale and onboard new clients, will you look to maybe offer commission or kind of ambassadorship positions where people, if they bring in clients or businesses that need your services, they can get a piece of the pie, for lack of a better term?
Yeah, I mean, we've discussed with legal some compliant paths forward for that, and it's definitely on the table. We plan to do that. If anybody brings value, right, then they should receive value, and there's no greed here. So, in terms of like a solid number, we haven't finalized that. We'd have to look at it on a deal by deal basis and see the impact, the value impact.
Yeah, and I'm sure we'll be coming, from the marketing side of things, we'll be coming out with all different types of ways for the community to get involved. So a lot of that isn't set in stone yet, and we're still working on it.
Yeah, but I think it's just simple, right? Like we want to hit 10,000 people on Twitter and 3,000 on Telegram. We're halfway there, over halfway there, or about on each one. And if each person just go out one more person in, we're at our growth metrics and we're launching. Mm-hmm. So from what I would highly recommend is, again, we're not launching until we hit 10K on Twitter and 3K on Telegram. So you won't know the launch date unless you're following us on Twitter with your notifications on this channel. That's very important if you want the real-time news on when launch is. But really, it's just, that's it. We don't ask much of the community besides just ask your questions, ask healthy questions, meaningful questions, even challenging questions in our chat. You can DM me, you can put it in the main Telegram, and let's make sure that everyone feels properly educated, because that's primary target number one is education.
I love that. And I guess like from that, it's like, it's just a big part of education is content creation. So as you guys get out there and put out more videos, more content that, people can utilize on their own without necessarily needing, a handhold, so to speak. And then that will get them really thinking and curious and start to allow them to identify specific questions versus coming in more general. I think that the interest that content like that can create is really good. So yeah, it's just part of the, the early stages of the journey right now for you guys on the crypto side, although, long standing within the space that you're trying to tackle. So
yeah, I think
Go
ahead.
I was going to add, one of the biggest ways to get the community involved, which is an excellent question, by the way, is raising awareness through raids. So we're going to do a lot of Twitter raids, getting everyone involved, whether it's, retweeting a KOL's post or just spreading awareness through raids. And we've seen that work quite well. So we'll make sure everyone gets involved.
Perfect. Now I do have a few questions here. We're kind of coming up to that 90-minute mark, although we don't have a hard timeline. So I'm really loving the flow of the discussion here, guys. I do want to maybe jump into a question from the audience. Let me see here. A couple, first two have been touched on already. So Martin Zealand was curious if you guys could go into a little bit more detail on exactly what's required for users who are looking to run the validator app. And what are the minimum?
No. Sorry, we're not B2C right now, so we're not.
Oh, so that would maybe a future use case.
Yeah, we might
potentially.
do it if like later down the line, if we think that, let's say we have an overage in compute resources and more compute than clients, we could potentially open up some of those dormant servers into a B2C model. But quite frankly, that's not really our core focus.
Yeah, and I want to highlight too, again, we are a centralized system. We're not having people pledge their nodes or pledge their metal. We have our own metal, and we're just allowing people to participate in the new economy that metal brings, right? So we're not like a lot of these other AI projects or these GPU projects that are crowdsourcing metal and then being a broker service. No, we have our own business. We have our own centralized network, and we're allowing customers to come use that network and then building a closed loop ecosystem based off of that.
Yep.
Yeah, because I know, again, like projects most of them have gone that route with more of the community-based bandwidth. So
yeah, almost all of them. Yeah.
But the problem when you do that is that you can't optimize that. When you have a decentralized network, you can't optimize it. Period.
well, that plus you don't know who's in control of certain nodes. So
Yeah,
always,
yeah. And
for
if
me,
you've ever
that's
tried-
I come from TradFi. Like I come from stock market and working in the corporate world. So like all that anonymity on that side of things, it's just too tough for me when it comes to certain things. So I love DeFi, I love crypto, I love how it is anonymous in a sense, but I also, when you're looking long term and you're looking at data security, I would choose to go with more of a centralized service, just personally. But another question, maybe a little bit more on because you mentioned you're not B2C yet, but more on the B2G side of things is government, bidding process can become very complicated. So how do you guys go about identifying which bids would make sense for the company or for the project? And that's a good way to phrase it, because I've been involved, not obviously in the sector that you guys are in, but I've been involved with clients in the bidding process. And I think for, a large Canadian-based partner, I ended up getting the contract for. It was 3 months for the actual kind of screening and everything, and then about another month. So it was about 4 to 5 months for the approval process to happen. So, putting the resources to do that, you have to make sure you're identifying the right fit is kind of where he was going, I think.
Yeah, I mean, the truth is that we're not really we've already done that part. We already have the gateways in with past government contracts. Like I mentioned, my cybersecurity company does the private cloud security for the US top agencies, and my co-founder has built on-prem for the government, data centers and optimizing old systems and servers and things like that. So it's not like we really need to jump in and bid for the first time so much as just go through the doors that have already been opened to us, and keep servicing. But again, that's a different deal, right? Because when you work with the government, they have a budget and then they own and operate and maintain everything. So we might not see annual recurring revenue from those so much as one big windfall payment for the project itself, which in some ways is actually very cool because that's just straight cash, you know, and that stuff we can go in and buy back and burn tokens. So,
well, and we may not even be going for government contracts right now anyway. I mean, with the amount of institutional support we've seen, there's a really real possibility where, you know, we kind of just stay in that domain, right? It's just we have that experience, so we can go that route if we need.
Yeah, exactly. It's more of just something we can do that, again, differentiates us, but government contracts can also be a bit of a slug to deal with, like you mentioned. So it's more organic at that point. You know, if the people we know want us to do more, we'll do it. If there's other governments that are interested, like ones that I've spoken to, then we could walk down that path. But there's so much opportunity on the institutional side right now that, you know, we'll see what the future is, but it could be heavily in that favor on the institutions.
Awesome. I'll go probably one more question from the audience, and then I'll get two people unmuted now. I'll get Mary up here. It's been a while since we've had her up, and I'll get Sujay up here for a question. This one is from okay, so this one's from T-Rex. He said he spent a decent amount of time, following the growth of GPUs and the way in which sometimes, a system can release, and then within 3 to 6 months, it goes from being the fastest to now essentially irrelevant within the space, considering the speed in which, data processing and AI is moving right now. What's the plan in terms of reselling older machines, offloading older machines? Like, how do you guys plan to keep a consistent cycle or updated inventory on that side because of how quick it can change?
Yeah, well, again, it's like if we had like a decentralized network where we just had a menu of GPUs and they all had different prices and new chips came out that, there's a couple options. Either you get rid of the stuff, which I think makes no sense, or you just move the older chips into a lower price category and the new chips into a higher price. When we're dealing with a centralized network like this, and where we can optimize the performance of these chips, we actually extend their lifespan. I'm not going to make a claim as to how long, because you never know, tech moves fast, but we are optimizing the performance, which should give us much more time than others who are stuck just dealing with the performance out the box. And again, I think what's really going to happen is that what we're running now is going to become our, second tier offering, where the new stuff becomes our first tier offering. But another very important thing to think of is the clients sign up for an annual or a multi-year contract. So the revenue is certain, rather than worrying about, it's not like a month to month, they can just leave whenever they think. So they're making big commitments and big capital investments into their budgets. So they're, making serious decisions for the long term. And again, what's cool is that could be where our B2C offering could come from, right? That older metal that's still optimized, that maybe the client wants newer metal, that's fine. We just take that overflow in our data center, and we just allocate it to that B2C solution where people can go rent by the hour. And there's a lot of options through our model. We've left it so that we're very agile and can adjust to market as it grows.
Awesome. And then one last quick one here from Ken Patchy. He just said the way, you guys maintain or keep a competitive advantage, he's like, how much of what you're doing is kind of proprietary, and like how much of what you guys are doing is going to be, open source. Essentially, he's curious how, or is there a possibility somebody could try and get out there and replicate or duplicate what you're doing to try and take market share?
There's always a way that people can try to replicate what you're doing, right? If we could learn it, someone else can learn it. And that's why we took the advantageous position of partnering with the Indian nation, because even if somebody finds a way to copy what we're doing on the software side, they're not going to be able to have like a zero tax state that keeps the price as low as we do. So you'd have to have both of those pieces of the puzzle together. When it comes to proprietary versus open source, this is proprietary. Like, we're not open sourcing our code to anybody, because that's our secret sauce, that's our IP. but transparently, there's a mixed bag of proprietary, completely custom developed tools, as in combination with some open source tools that you can find on some of those larger libraries out there. But again, it's like, it's always easy to ask these questions of, like, what if someone else comes and does what you're doing? There's also a huge advantage to being first to market, right? And I think that has been proven over the test of time. And I believe that we're well fortified and positioned to plant our flag as that first to do it right.
I agree. First movers always have an advantage, in a sense, and also, if other competitors or people come into the market, it just shows that you guys are, really identifying something that there's a need for. I think too.
Yeah,
Like there's
and
always
again,
that silver lining within
the last part, and
within
sorry to
that.
step on you there, is cybersecurity, like we just talked about. Do you have a multi-million-dollar budget for a cybersecurity team, or do you not? Because that's going to be the big thing that makes an institution decide whether they want to take this on or not. If they're already big, even a huge person with enough money to crush us, like, do they want that job? Do they want to add that to their whole thing? They've got to appeal to their investors and shareholders. It's going to be easier for them to just rent it from us, especially considering that we could build on-prem and manage remotely. So we could build it at the facility.
It's a really good point. I appreciate you touching on that too, Maestro. I guess for me, just out of curiosity, before I throw it to Mary, because my dad always taught me ladies first. So we'll get Mary up before Sujay, and then we'll have Sujay close it out. Before I throw it to her, just out of curiosity, like how able is what you're doing, your GPU is able to work across different AI programs or different languages that exist? Because again, I'll preface this, I'm not a back-end developer, I'm not a Solidity guy, so some of the terms I may use are a bit layman speaking, but just trying to figure out how functional it would be across these different language models and AI tools that exist. I mean, we've seen recently, I think it's China released Vidu, which is meant to kind of model or compete against Sora, which is the video prompted AI tool. So yeah, I guess that's kind of the best way I can simplify it. I hope you get the question. I don't really know how to phrase it specifically, though.
No, that's okay. I mean, it all comes down to the fundamentals, right? Like, what is the greatest value proposition of AI right now? It's speed. It's not intelligence. Intelligence comes from fine-tuning models, training models, etc. But it's speed. And in order to net the speed, you need faster generations and faster cooldown rates, which we're bringing to market. So it's really customizable in terms of what, once we engage with a client, what they want to do. And whatever they want to do, we can custom configure the stack to do that. The baseline is that we're optimized for speed and cost savings. And the layer 2, if you will, or the kind of toppings that you put on the ice cream sundae would be, what are you actually trying to accomplish for the term of this contract? And if we need to implement different software tools for compatibility, we do that.
I appreciate that. Mary, I'll throw the mic to you if you're still there, still ready, and then we'll get Sue to close it out.
Hey guys, hello, good evening.
Hi, Mary, how are you?
Hi, I'm fine. I'm off 4 days now from work, so that will be great.
Nice. Started summer vacation.
Congrats.
No, it's just a mini vacation, maybe it's holiday here in
Nice.
Sweden. Anyway, I'm sorry I missed the first half of this AMA, so maybe this question is like already covered. But
That's okay.
I wanted you to talk about the token, because you're going to have a token, right? And
Correct.
And it's going to be launched soon. I read on your Telegram side or Telegram group. And I want to know how the correlation is with your project and the token. What's the purpose of the token? Because it said somewhere also that you could have launched this project without the DeFi aspect of it. So
Yeah.
how are you gonna?
Yeah, so it's a great question, and I think it's worth repeating anyways. But first, just thanks for
Sorry.
joining the Telegram, and thanks for taking that interest and also asking a good question. It's pretty simple. You may have heard on your time on here that we have an Indian nation partner. And once we made that decision, we kind of realized that going down the private equity or VC route was going to take another several $100,000 of legal to figure out and a lot of time. And even still, we might not have the result we're looking for. So, you know, we're early blockchain adopters circa 2012, 2013. And we just wanted to go back to our DeFi roots. We had the white paper already drafted. We were thinking of launching this earlier in January, but really wanted to watch the market a bit and see where things were going to go with certain events on the horizon, like the halving and whatnot. And also measure, you know, if you want to call them competitors or at least people in the same domain, and see what they did right, what they did wrong, and how we could do it better, because it's without a doubt that they validated the market. But what we're doing with the token is kind of creating a transparent supply chain and financial loop using DeFi to tokenize the economy of the real world business. So this is how it works. We'll have fees generated by taxes on our smart contract. Those fees are going to be used for things like buying more GPUs, operating expenses, marketing, things like that, which are broken down in more detail in our white paper under tokenomics. But let's just follow the chain of cash and chain of supply. So token revenue is used to buy GPUs. The GPUs are then delivered. We'll take photos and or videos to show the serial numbers and the real assets that got delivered. A couple weeks upon delivery, we will deploy one or more servers based on how many GPUs we've acquired. At that point, we'll do a proof of compute exercise where we will ask the community for some files. They'll provide the files, we'll process them on the new servers, and we'll send that hash of compute to the community so that they can see how many tokens were taken, how many GPUs were acquired in the physical photos, and then tell with certainty that these exact serial numbers and IP addresses are deployed on our new servers. And then the next step is to rent. So that's the supply chain side. But then the next step is to rent those servers to clients, which we have a backlog of ready to go on available nodes, and take the revenues and profits at a minimum, 20% a month, and bring the cash back into the token side of the business in order to buy back and burn tokens from our liquidity pool, thus creating a deflationary price pressure on the token asset itself, which will benefit all holders.
So when you say the burning will be benefits to the holders, is that the only benefits, or is it only?
No, that's just in the phase we're in now, where we're in phase 2, which is scaling the GPU cloud. But once we get into phases 3 or maybe 4, depending on how long it takes us to get to those phases, we do plan on fractionalized ownership opportunities for holders of our token to partake in actually getting like dividends, revenue share, so to speak, from the portion of that server or multiple servers that they own. So initially, yes, deflationary asset, but then an opportunity to actually enter into almost like a revenue share or joint venture from a fractionalized ownership perspective.
And that's going to be open only for the token holders then, or?
Yeah, absolutely. Like that's only for token holders. So the only on-ramp.
But you said a few years, like in a few years, or what did you? I missed the time aspect.
I really don't know the timeline. I don't like to speculate on things I don't know, but what I do know is it's a simple 4-phase approach where we've got phase 1 done, proof of concept. We ordered GPUs, put our code on them, optimize the performance, rented to a client, and hit a 6-figure rev target first year. They're looking to re-up at double the money in 2 years now contract, and we're just looking to scale that in now phase 2. And if it's really successful and the community tells us, hey, we really want these NFTs like sooner, that's going to be a good indication for us to maybe expedite that process. But it really comes down to the mutual endeavor of community and company. And if the community tells us they want something, we're going to consider that deeply and move advantageously toward that direction.
Okay, cool. All right, thank you.
Oh, my pleasure. Thank you. Great questions.
Thanks, Maurice.
Thanks so much, Mary. Always a pleasure to have you up, and it's have a great little mini holiday over there.
Thank you. I will.
And we have Sue coming up next. Sue J, if you want to kind of close out the live questions for us. And again, guys, I really do appreciate. I know I mentioned 90 minutes, and we've gone a little bit over that, so I do appreciate the extra time from all of you.
It's all good. I'm very happy to see so many people here and still participating and hanging on for the long haul. With that said, yeah, we will have to make this probably the last one because we've got to get on another at 4.
At 4 o'clock as well, so that timing works perfectly, boys.
Great.
All right, that's my cue to keep it short. Thank you, Maurice. Hello, GPU Maestro.
Hi.
All right, I think I had a few questions, but most of them have been answered, either asked by Maurice or the community members. So
Okay.
I just have one left. And this one's with, the initial GPU requirement process that you would go through with, a client. Now, if there's someone that are moving from an on-premise infrastructure to your cloud infrastructure, then they would have an idea of their GPU requirements.
Was that a question or sorry?
Oh, sorry, I got broke up.
Okay.
Sorry, I got muted. Yeah, no, I was saying if it's a startup, right? Somebody starting up new with a new idea, and they're not really sure about their GPU requirements, they come to you. What is the process of identifying the minimum required and the maximum required GPU for a company? Because I'll just give you a context of why I'm asking this question, because I've managed cloud infrastructures in the past, and one of the trickiest things would be to identify how much GPU power is required. And we were serving clients who they were not using generative AI, but it was mostly CAD CAM stuff, like Autodesk and those kind of softwares. And the problem with GPU would be there would be certain actions in those softwares which would cause the GPU to really spike up and even sometimes crash the GPU. And then other times you would see that the same set of users using the same software, the GPU would just plateau, and you would be like, why do we have so much GPU allocated to these people? They're not even using it. So it's very tricky considering how expensive it is. So what's that process that you go through with a new company that comes to you?
Yeah, so I think first off, I want to be very clear that I do not implement the proprietary code. That's for my partners and or my cybersecurity team. But they also help with those initial conversations. The way we did it with our proof of concept client was very simple. We looked at the deal that they had. We asked them about the user base they have now. And we were able to look at the compute that they were on to take a look at what kind of load they were carrying. And then we were able to ask them about the future, right? Like, how many users do you think you're going to get in between now and the end of your contract? And then we get to work on building a custom stack that exceeds their needs while getting a lower cost. And therefore, for instance, like you said, sometimes they have lower runtime. And that's what we had. We had a client with 100,000 users, still have them. They started with a deal they're paying $300K a year for. We took them down to $70K a year. They since recently increased a little bit to $84K, but they're about to double their contract for 2 years and about $180K. But when we started, we built them a stack that they were only using about 22% of the available resources with 100,000 users. They've since grown in 9 months to about 8 or 9 months to about 200,000 users. And now they're clocking around 40% of the available resources. So they can still grow about 150% on around a quarter of the cash. And that's really what we're doing. It's very much a white glove service. And I'm sorry I can't answer that at a more technical level, but some of that's above my particular role in the company.
Yeah, no worries. I think you kind of answered it. Also my question was, do you, once deployed, do you also have an automated sort of system that will monitor the usage of the resources? I think the way you're doing it, you're always giving the client a headroom for
Right.
expansion, for scaling.
Correct.
Dedicated metal
yeah.
too.
Yeah, it's dedicated metal, but yeah, you're right. We have our own operating system with our own UI, so it's very convenient to monitor usage. And yeah, from everything up, we get the metal, but then from the metal up, it's all custom. Our own drivers, our own software, our own compilers, and different machine learning tools. And were you with us for the full call?
I was.
Okay, cool. So you heard the reverse engineered from a government contract. Yeah, so
Yes.
it's pretty straightforward. Just looking at what they need now and what they need by the end of the contract and making sure they have that headroom.
Got it. Yeah, lovely. Thank you very much for clarifying on those questions. And
thank
wish you all the
you.
best.
It's always good to have somebody who's an expert ask some challenging questions that the community needs to know. So thank you very much for your input.
Thank you, Maurice.
Thanks so much, Sue. Yeah, I really love having you here as always for the questions. I always kind of joke with Sue, I try and keep it high level, and we got the community to kind of dive a little bit deeper on some of the stuff that's specifically, in their neck of the woods. So appreciate that. And guys, again, really, really good answers on everything back and forth. Excited to kind of see what the different keynotes, opinion and comments are tomorrow, just the way that the spaces are set up. It's like myself, the main host there at CoinMerch, who's a partner of ours, and then 5 other influencers or KOLs. So, a lot of kind of good cross exposure, and you're going to get to put the idea out there in front of a lot of people in the space. So yeah, really excited to see the feedback then. But, I'll close off from my side here by just saying, the overall idea and just listening to you guys and that chat we had earlier today, I could tell you do have a lot of passion, a lot of knowledge. I think that's the most 2 important things with anything long term. The road's not going to be smooth all the time, but I think if you have that experience and context that you can, fall back on to, get support, it really helps. And I always say passion is important for long term, because if it's just about the money, when in those downtimes, it's going to be easy for, that's why I think a lot of teams walk away. But you can see this is something you guys have experience in, you do on the day to day. And I'm personally excited to see how the expansion of, a previous existing business and brand goes as you guys introduce the crypto side. So, as they requested, guys, make sure you jump into the community, stay active. They're looking to hit a couple of those key metrics before they announce the official launch. From there, that's the best place you can kind of stay up to date and know what they're rolling out. So I'll throw the mic back to the team just to close out and make sure they can get to their 4 o'clock. But gentlemen, really appreciate the time and really excited to see what some of the feedback is tomorrow from the panel.
Yeah, thank you, and thank everybody here for chiming in, and especially thanks to those who ask questions that really help. It's important to know what the community wants to hear and important to give that information. I guess the last thing I'd say is just because we're not launching or releasing our launch date, and we're relying on certain community metrics, 3,000 on Telegram and 10,000 on Twitter, marketing team has advised me to mention that it's very important not just to follow the Twitter, but make sure your notifications are turned on this particular channel, because it's the only way that you're going to get that instant update for when our launch date is.
Yeah, we're not sure that we're going to announce when a specific time for the launch. It's most likely going to be what is this? What do they call that? Surprise launch? Quick launch.
Mm-hmm. Okay. Well, thank you everybody so much, and I appreciate the time.
Yeah, and make sure that's an important part to bring up. I don't stress notifications enough. I need to do a better job of that on even our own Twitter too. So yeah, make sure if you guys do go along and follow the AIGPU main Twitter handle, you hit that notification alert button right beside the follow.
Awesome. Well, thank you so much.
Well, appreciate it.
Y'all.
I'll wrap the recording. I'll get you guys the raw footage dropped in the group we have, so you can share that with your Telegram community. And then, as I mentioned, I'll send it as well over to our video editor. He chapter logs everything. He's got his work cut out from on this one. And then he'll have it uploaded likely within 24 or 48. So, Friday morning latest, and I'll get the tweet up from there. But I'll share the announcement of the utility showcase for tomorrow with you guys in the group. And then I'll see you on the mic on Twitter around 1 p.m. Eastern tomorrow. Have a great 4 p.m. call, guys.
Thanks. And you too. Take care.
Thanks so much.